Hello everyone, I'm Sahil and welcome back to the channel. If you guys remember, a few weeks back I made a video on Ping An covering the premium income drop that they had in the past few months. But to my surprise, right, we had such a good discussion in the comments. Like a lot of subscribers and viewers commented. I'm not sure if the the commenters are viewers or subscribers, but if you are just a viewer, please convert to a subscriber. What are you waiting for, right? So yeah, but anyways, like it was quite impressive. Like the discussion was really good. I personally got to learn a lot from you guys, and I hope whatever I provided, the materials I provided are also helpful to you. So thank you very much for commenting. And what I wanted to do in this video is just compiling all the information that we gathered through this discussion and put it down in one video for the benefit of everybody else who's actually trying to search for Ping An and they don't know about them. Like I think I'm the only YouTuber who actually is covering Ping An right now. So yeah, that being said, I also have started a Discord channel. And I will link it down in the description below. I will talk more about it later in the video at the end or somewhere, but I just wanted to plug it in over here. Nevertheless, let's hit it out. Right, so the first comment is by Ben Hart, and thank you very much, Ben, for commenting. I really appreciate it. So he says that he's also heavily invested into Ping An, and he actually bought some more shares during the latest weakness. And the reason why he bought is because he believes that the 6% decline in the premium income is not what we want to see, but the share price drop is far more. So he's buying, and actually completely agree with Ben. Like a negative 6% decline in the premium income, but on the other side, the share price dropped by 30%. Obviously, it's a great buy, right? But if you dig deeper, right, we have to understand the investors are forward-looking. Their projections are forward-looking instead of what has already happened. So 6% decline. If you see the 6% decline number is coming from year-over-year growth of the premium income in the first 6 months. And if you look into the individual months, we actually had a very good performance in the first 2 months. Like it was 30% growth. But then in March onwards, it started declining double-digit as well, like 28%, 20%, and so on. So what I think investors are thinking of is like, let's just extend this negative growth out for the rest of the year. And then what happens? We see a negative growth of a high teens, in the high teens, like even if the decline is 20%, right? And does it stop over there? Will Ping An actually see a growth in the next year? We don't know. Maybe it will just keep on declining from there. So yeah, that's what investors are seeing right now. But in my opinion as well, I'm with you. I think it's an overreaction, and it gives us an opportunity to buy. You bought, I bought, we all bought. So yeah, thank you very much for your comment, Ben. And oh yeah, actually another comment by Ben. So here he's mentioning the analyst projections for Ping An. But obviously I don't want to give a lot of weight to these numbers because we don't know when these were updated, and at the same time we don't know the assumptions of the analysts who are projecting these numbers. So a lot of times they're just doing it to fill up their model. So yeah, I like to focus on what the reasonings are, like what they are projecting for, what are they seeing that I'm not seeing. But I don't look a lot into the projections that are like the numbers they're projecting. So yeah, we should rather look at the fact, like have the overall arcing theme, the investment thesis, and then we see how it's playing out. Like for Ping An, right, we say that the tech that they're developing is going to help in their insurance business, and they are going to be a market leader. But is that happening? Right now, not so much, because they're lagging behind. They have a negative growth, whereas the rest of the insurers are actually performing better. They have actually seen a positive growth. So right now, the tech is not helping. What is happening? We have to dig in, and if our investment thesis doesn't play out, then we go around. But yeah. Anyways, thank you very much, Ben, and I hope you stick around for all the videos that I make, and I keep hearing from you. So now the next comment is by Andreas. So Andreas also has bought into Ping An. I don't know if you are a new investor or you have been just adding on to your position, but he's from Germany. So this is something that is quite weird, right? I have a lot of viewers from Germany, and I really wanted to understand what's actually going on. I know that Germany is actually very close to China in terms of trade, and if I'm not wrong, I heard that China has become the biggest trade partner, and they are quite open to work with the Chinese instead of the rest of the Europe, which is pressured by the US, and they're doing their propaganda of like, not letting European countries to, have close relations with China. But Germany is taking its own stance, which is good. But that is on the economic level, right? I want to know, why are the Germans so excited to invest into Chinese? Is there like the change in perception of Germans to Chinese companies or so on? I really want to know. Just comment down below. It would be quite fun to understand. So yeah, and there are quite a number of German commenters over here, so that's great to hear. And then we have the next comment is by Bruce, and like I mentioned to him before, I'm so glad that I've been noticed by Catman himself. So yeah, thank you very much, Bruce, for your comment. And actually, yeah, you have been commenting a lot in my videos, and I really appreciate it. So thank you very much. And what Bruce covers over here is actually he's trying to establish that there was a decline in the number of insurance agents that Ping An had from last year to this year. So this year the number of agents in their Q1 earnings report was 985k as compared to the over 1 million in 2020. So what he's trying to say is that maybe because of these decline in the manpower, right, there's less sales force, so there's less sales, and obviously your sales will drop. So yeah, but then again, he also counters that such a small decline in the sales agent shouldn't actually show us such a huge drop in the sales numbers. And at the same time, this decline in the sales agents is because of what Ping An is doing. They are actually having a reform in their life insurance business, and they're actually now training their agents with AI and all those things, right? And they are also increasing the quality of the sales force. So that's why we are seeing a decline in the sales force. But then again, if they're improving the quality of the sales agents, right, then there should be an increase in the productivity as well. And that's exactly what Bruce has mentioned here as well. So that's what we are not saying. And yet again, he mentioned that he also have experience in sales organization, and a drastic change that Ping An has done recently would actually take over a year to materialize. So yeah, and I think Ping An themselves also believe the same thing, because according to their guidance, right, for the year, they have only mentioned that they will have positive growth in their insurance premiums, but they didn't really give us a number. And I hope that, not I hope, but I believe that that is the very reason. So they're having a very drastic change in their products, their sales agent and everything, right? And that they hope that there will be a slight downward pressure on their sales. So that is completely normal, and that it will take some time for things to pick up. And with what they are trying to do and the improvements they are bringing, it is actually better in the long term. There's some short-term volatility, but it's okay. And Bruce also mentions that he has seen a real anomaly in between A and H shares of Ping An, and he says that usually A share is selling at a premium to H shares, but then now recently it has flipped flop, so A shares have become cheaper than H shares. And I think, in my opinion, this is basically, it doesn't really matter, because usually, right, if stock is trading on two exchanges, there's always a market maker that will actually come in, and if there's a difference between two exchanges, right, he will actually buy from a exchange where the stock is trading cheaper, and he will sell it on an exchange where the prices are better, and this will equalize the price. But obviously, China being China, there are some frictions in between fund flow of domestic to overseas, and hence we see these efficiencies in the market. But then again, these inefficiencies are actually good for us as an investor. We can see where we are actually getting a discount, and we can buy from there. So that simply is good for us. And also, you have the lot size is smaller in A shares, only 100 shares per lot, whereas H shares you have to get 500 shares. And that also could be a reason, because when there's the barrier of entry for investors, retail investors like us, into a stock, then we are gonna go into that particular stock, right? Like A shares, only 100 shares as compared to the H shares. So if there are more retail investors, there are gonna be more trades, and as there are more trades, right, there will be more volatility. So yeah, I think that is another reason why we see such a drastic change. So yeah, okay. So that being covered, let's move on. Thanks, Bruce, once again for the comment. And then we have Manfred, and Manfred Thank you very much, man. Like, you have been with me for quite some time. So I've been seeing you commenting on my videos for quite a number of, like, it's been quite some times, I think a few months. So yeah, thank you very much for supporting the channel. I really appreciate it. And Melfred says that he has actually noticed that Ping An is massively shorted, but the information is really, like, here and there, and every side is saying something different. But I remember that the biggest shorter is JP Morgan with around 11%. They have their short position already since a long time. Please do, everybody, your own research about this. Some sites, for example Reuters, even say that JP Morgan has 11%, has actually bought 11%, which definitely cannot be true. Just food for your thoughts. So yeah, I actually went on to do some research, but I couldn't find much information on shorting, basically. But what I can cover here is that, Ping An themselves, not Ping An, JP Morgan themselves, right, actually pulled out like all the top 10 shareholders of Ping An, and arranged them over here, and also found some historic data to see who has been trading. So JP Morgan themselves, right, they're actually the 7th largest shareholder of Ping An with over 1.7% stake in the company. And yeah, so if they have 1% stake in the company, right, I don't see the point why they would short the company as well. But I would like to put a disclaimer out there that, I don't really know how these big financial institutes work. They could be hedging in some way, but I personally don't know how this hedging thing works. What is their strategy or whatsoever? It's just a buzz term for me, hedging. That's all. But I don't really how they do it. Maybe they are shorting to hedge, but simply I don't know, and I don't want to comment about it. Another thing I would say is, like, JP Morgan, right? They have JP Morgan. Yeah, their target price for Ping An by their own analysts is 130 Hong Kong dollars, which is like 2x within 1 year, 12 months. So if they're projecting 2x, why would they actually short the stock? That doesn't make any sense, right? But yeah, anyways, looking into all the shareholders, right, I wanted to do this because I wanted to see who's buying and selling, right, who has increased their position and decreased over the past 1 year. So obviously CP Group, right, we see that they have actually decreased their position from December to recently. So yeah, and I actually made a video on this, and I covered it. Like, they sold 182 million shares of Ping An, and that was a big number, right? And but recently they have bought, so the difference has actually decreased a bit. So right now they still hold the biggest stake in Ping An with 6.9%. But anyways, my reasoning behind why they did it is because I thought, like, they have been invested in Ping An for like more than a decade, and they might wanted to take some profits off. Like, their position might have increased by quite a lot, right? So they might have wanted to take some profit off. But one of the subscribers, he's from Thailand, and he commented, I forgot the name, but he commented on my video, and he actually had a way better point, solid point, why CP might have sold a part of their position. So his explanation was that, CP Group is a conglomerate in Thailand, and they own a lot of different businesses, but mainly focus in retail and, the real estate side. And they have been seeing a heavy loss in both of these sides because of COVID, right? The situation is pretty bad in Thailand. So he explains that, it might be because of this, downside on their business, that they want to have some cash position on their balance sheet to wear off any future, any difficulties that they might face in the future. So that's where CP Group might have trimmed up of their position in Ping An. So I think that actually makes a lot of sense, and I would completely agree with my subscriber over there. I'm so sorry I forgot your name, and I didn't have you prepared over there. It just came into my mind right now. So yeah, thanks anyways, man. So secondly, we have all these three investors, right? These are like all the state-owned investment arms of the state government. So they have really not changed their position at all. So it's just constant. And then the next three are all the big banks from US, right? Investment firms as well. So UBS has actually increased their position. So they currently hold like 2.2% of Ping An. Over the last 3 months, they have actually, almost, I think, I don't know what's the gain here, but it's quite a big amount. So yeah. Then we have BlackRock. BlackRock has also, they had increased slightly, and then in the past few months they have declined their position. JP Morgan, this one is quite impressive. They actually timed the market perfectly. So they trimmed half of their position from December to March, and that was where Ping An was actually trading at their peak. And the timing right there is freaking perfect, and I don't know how they nailed it up. And this makes me believe like I should actually follow them, see what they're actually buying and selling, so I can do so as well. But yet again, JP Morgan still holds 1.7%, and then we have all the other companies over here. This thing, right, I will actually publish it in the comments, in the description below. I will link down the spreadsheet and you can explore it yourself as well. And I will try to update it as much as possible. So yeah, if you guys can be informed. Okay, that being said, okay, that's for Melfred. Once again, Melfred, thank you very much for your comment. And not Melfred, sorry, Manfred. Sorry. Okay, and then the next comment is from Sam. Sam, once again as well, I think you joined us a month or two ago, and you have been putting in your views in the comments as well, and I thank you very much for your opinion. So yeah, Sam has taken a stance of a psychological thing, and I completely agree with this. The psychology plays a big role in investments, right? So yeah, what he's trying to say is that Ping An's stock price, if you go see the stock price, right, long term, so since 2011 to 2017, it has actually not seen much movement, right? And it has been just range bound. So what Sam says is that investors they become bored of the stock and it just becomes boring, and then they start getting to go out of the company. And it's just our mentality, right? Like if we start investing, then we're so focused in something that we see it every day. Like we're gonna check our portfolio every fucking day, every 2 minutes for some people, and that is not healthy, right? And once we are not seeing some excitement from there, we try to oh, why not? Maybe I made a mistake, I should just sell it out and go into something that is actually has a momentum and is going up. And we also see in the news on YouTube, like people are boasting how much they are gains and all those things, and we're like, why the fuck am I stuck over here? No movement in freaking past 5 years. So yeah, they start selling out. But then over this period, like 2011 to 2017, Sam mentioned that the cash flow was increasing by 20% compounded. So the fundamentals were improving, but then there was no effect in the stock price. But then again, when things get noticed by the institutional investors, that's where we see a shootout. And within just not even 1 year, in a short time frame, it went up 126%. So yeah, and since then, again, it's just range bound. And Sam says that maybe that's why investors are slowly dropping out. They are getting bored of Ping An. So yeah, and I think I agree with him. Ping An is not a very interesting company, and I don't think a lot of youth is invested into Ping An. So yeah, I completely agree with Sam on this. So yeah, thank you very much, Sam, for putting in your views, and I really appreciate you as well. Then moving on, we have Leo. So Leo is, I don't think he's invested into Ping An right now, but he says that he will go in when it reaches 55. So yeah, my heart really, like I mentioned, right, my heart will ache at 55 if it goes down there. But obviously it's going to be a very good buying opportunity if it ends up over there. And I would love to buy it as long as I have the cash. The problem right now with me is I don't have the cash. So if the stock price goes down, it's just going to hurt me, nothing else. If I have the cash, I will be happy for the stock price to go out. So yeah, but if you ask me, right, personally, I don't think that will happen. I don't think Ping An will go down to 55. But nevertheless, I didn't think that Ping An will ever reach 70. And now it has already crossed 70. So you never know. Don't listen to me. I'm just a dumb kid. So yeah. Then Leo again. Oh, this one is just for Chinese banks and not relevant for this video. Then we have Andrew. So Andrew is really taking the financial statement side of view, and he's trying to mention how Ping An has cash from financing activity has gone down because they have been paying off their debt and not raising much of the money. They also have decreased their investments. So maybe Andrew mentioned that maybe that is the reason why we are seeing a decline in the growth, right? There's less money invested, so the growth will be less. But I have a different opinion. I don't think I think the reason why Ping An is doing it is because they want to make their balance sheet more strong. And why they want to make it strong is because I think they're forcing a lot of bankruptcies happening, because China has launched a new rule, right, where they are deleveraging all the real estate companies, the big real estate companies who have been leveraged a lot. And Ping An has a lot of exposure to these companies, in both in terms of debt and also in terms of equity. So we are already seeing a few defaults and also bankruptcies happening in the sector. And definitely Ping An has to take impairments and write-downs because of this. And maybe that's why they're trying to actually make their balance sheet more solid, so that they can have write-downs and it doesn't affect them much. So yeah, I think that is where Ping An is going right now. And it's not, yeah, I think you got the point. So yeah, but anyways, thank you, Andrew, for putting in your information. I think it's very, very important to have someone like you who's actually looking on the cash flow and the balance sheet, and not just on the income statement. A lot of people just view the income statement, see the net profit, see the revenue, and use the PE or the PS to just value the stock. But that is completely trash, because income statements can be manipulated in many ways, but it's very hard to manipulate cash flow and balance sheet, and that is where you get the clearer picture of the business. So yeah, thank you, Andrew. Moving on, we have Bruce again. All right, so this is actually very, very interesting. So Bruce actually told us about an article that was posted by someone in China. I don't know who's the author, but anyways, in this article, right, it's very, very interesting, and it actually answers a lot of our questions that we have. So what it says is, right, so firstly, the author agrees with us that the stock price decline in the past few months is due to the decline in the income, premium income as well. So yeah, that's then. And he also covers that, the Ping An manpower data was temporarily high in May last year, and it also corresponded with the single month premium as well. It was the highest in May last year as well. So what he's trying to say is that then onwards, the premium data actually declined. And what he means from here is that, he's trying to get to the point where, the year-on-year growth for the first 6 months was actually down, because the past year numbers were strong. But going forward, as Ping An saw a decline in the second half of 2020, right, it is easier for, if Ping An just keeps on their momentum strong, right, what they have already achieved in this year, if they just maintain it, then it's their income premium is going to see a positive growth. And that's what he's trying to see. And he's saying that the stock price decline is overdrawn. So yeah, and I agree with him, and I will share with you why as well in the next part of the video. So yeah, and he also says that obviously we know that Ping An is going through a reform in the life insurance business. They're coming up with new products. They are overhauling their sales agent strategy and all those things. So yeah, that obviously has a lot to do with the decline that we are seeing in Ping An's growth right now. But at the same time, what this author is saying, that the main focus of any business is product and sales, right? And you have to get these two things right. But the main part is the product. If your product is right, sales is gonna promote and sell it, right? Sales can do it. But if your product is bad, then no matter how good your sales are, it's not gonna sell. So that's where he actually brings up a few a review of the products that Ping An is saying. And he brought up this web post by Mountaineer Seeking Snow, where this person actually is explaining how Ping An's products are actually good, the new products, and they are really emphasizing on the service. And we all know Ping An's service is pretty good. It's really backed by the by tech, and they are able to disperse claims very, very fast. And we have also seen recently, due to the flood, Ping An is constantly saying that how fast their claims have been going out, and it's been fast tracked. So their service is really, really good, and in the long term, I think Ping An is gonna go back to normal, and the normal is being the industry leader. So yeah, that is the entire point that this author is making in this article, and I agree with him on all the points that he has made. I agree with him. And thank you very much, Bruce, for actually bringing up this for us as well. It was really, really insightful. Moving on, then we have oh, sorry man, I can't really pronounce that name. I don't want to like butcher it, so I will just cover it whatever you have said. So this person over here is he's trying to share with us the Morningstar coverage on the founders group takeover by Ping An. So according to Morningstar, this might be forced by the government, but if you ask me, right, it wasn't. I don't think that it was forced at all. I think whatever Ping An acquired in terms of assets was is really it it is a lot of synergy with whatever Ping An is doing. A lot of the assets are in the healthcare side, and Ping An is really expanding out in the healthcare side. They are building an ecosystem in this area. So they have their own hospital, their own doctors, and everything is their own. Insurance is their own, and everything. So they are making this ecosystem, and whatever assets they have acquired from the founders group is actually going to complement their businesses. So I don't think it's forced at all. And they are actually getting it at a very good price as well. And at the same time, it's a good deal because, you know, they are just buying it in cash. So get everything, and then they don't have to worry about paying off the debtors and anything. It's just getting the sets and done. So I think it wasn't forced at all. And I think even though like there was a decline when this news came out, I don't think that had to play anything with the long-term stock price decline. And it just doesn't matter as well. You know, if a company is acquiring some assets, I don't think how it will be a bad thing for a company. So yeah, I have actually covered this in depth in the Q1 earnings results video that I did. So you can also go and view that one. I have actually covered individually what assets they have acquired. So yeah, that would be better to look into. But I think, yeah, like I mentioned, it has nothing to do with this. And that was the last comment, but we also have another one, and this one is from like my email from Ian. And Ian is also like, he has been around for quite some time and has been supporting me. I'm sorry I didn't reply to your email, Ian, because I wanted to share it out in the video itself, and I would like to cover it just here. So yet again, you know, he talks about the various challenges that Ping An is facing, and he's saying his argument right now is that it's a lot of like, you know, the downturn in the stock price is a lot to do with the tech clampdowns the Chinese government is doing, and that's obviously increasing anxiety in investors because of because of like, you know, Ping An is also a tech side and is viewed as a tech company as well recently. So yeah, but then again, Ian also counters his agreement with that. You know, Ping An is actually more compliant with the rules and regulations, and they also have, like, you know, like we saw their top four shareholders. 3 of them are state investors, so they are working very close to the state governments, and yeah, so they are more, literally they have to be more compliant to the regulations, right? And I completely agree with Ian on this point. I think Ping An from the very start, right, their goal was to build a solid base and then grow from there, instead of like a tech company who wants to penetrate and, you know, just push the limit as much as possible, and when the regulations come in, then you go and adapt. For Ping An, the chairman has been very, very clear. They've built a solid base of getting all the licenses they could in the financial industry, and from there they started to get into the tech side. And I think that is a very strong reason behind it. And at the same time, like you mentioned, right, it's not just the investors of Ping An that is related to the government. Ping An actually works with the government very close. Like the national insurance, right, it's called SHI. I forgot what is the state health insurance or something like that. They manage for each and every state government. They manage this insurance business, like, you know, the payouts and everything. So they are really working very close to the government. They have all the licenses and everything. They're doing it like they started like a traditional player, and they are incorporating technology into traditional businesses instead of coming out with the technology getting into traditional businesses. So it's a very different dynamics, and I think Ping An is very, very safe. And that is a very good point of Ping An. You know, as a foreign investor, it's a very good company to invest in. They are following all the various international regulations in terms of accounting. They are not like doing frauds like what you can see with other companies sometimes, like, you know, what happened with Lunkin and all that. and at the same time they're not listed on US exchange. They are trading on the OTC, but it's not like they're not regulated by any US regulations. So yeah, that is where Chinese government is actually clamping down. They are very worried about data and everything, and they are worried like by being listed on the US exchange, US regulators actually want to audit financials of these companies, and that is what China is afraid about. They don't want to get the data of their companies into the US hands, and Ping An doesn't have to report anything, so they are on the safer side, and I don't think they will face any such issues in terms of regulations and stuff. So yeah, I think Ian is impressed by the discussion we had on the comment boxes as well, and I'm personally very warm to have so much knowledge being shared and debated on. And I personally feel if you just share and debate your knowledge, right, it's worth so much more. So I have learned a lot myself from whatever you guys have shared, and I hope that whatever I have provided to you guys, you are getting to learn something new as well. So thank you very much. And that is where Ian mentioned that we should have a WhatsApp group for the Ping An shareholder. But I felt like having a WhatsApp group is a privacy issue, because everybody can see each other, the numbers of everybody, the contact numbers. So that's why I think it's better to do a Discord channel, and not just for Ping An shareholders, but everybody who's on the channel. So yeah, I am going to do that, and I will link it down in the description below. Hopefully everybody would join in, and I think if the community is bigger, there is more discussion, and we can counter each other's argument better. So yeah, I don't want to, I was thinking about it way long ago, but I don't want to do it. I don't want to have like two people inside and then nobody's talking, and it's just like a boring shit, and it's just staying there doing nothing in your phone. So yeah, I think, but now it's a good point. Maybe we can start something and discuss on things, especially when things are so hot, right? Everything is going down. And at the same time, right, I wanted to mention that next month my university will start, so I won't be able to make videos. So my touch point with you guys was only going to be the Discord channel. Hence I wanted to put it out there right now. I don't want to lose touch with you guys. Maybe we can still discuss. I can still share my portfolio, my buys and sells, and what am I doing, what is the new things I've learned, and also know from you guys. So I think it's a good time that we have a Discord channel. So yeah, go and join it from the description below. And I guess that's about it. Oh yeah, okay, I forgot to mention. So this is one of the analyst reports. I can't mention which analyst it is, but it's a reputable one. So yeah, they also agree with whatever points we have generally made. So they also agree that first of all, they take the June premium data as a positive catalyst. They say it in bold letters over here. We take Ping An's monthly premium data as a near-term positive catalyst. Compared to April and May, where we saw 28% decline year over year in the monthly premiums, the company has narrowed down its gap in June, with the first year premium growth being negative 18%. So, and also they are sharing the same view as what we read in the article, and I explained that the second half of 2020, the base number is down. So if Ping An is able to maintain their momentum, right, they're actually gonna go positive growth. And at the same time, Ping An, like I mentioned, their guidance was that they want to just end the year positive NBV growth. But this analyst over here believes that they're actually gonna have better results. They're gonna be above their own guidance. So yeah. So with that, I think we can end this video. I hope everybody is doing good, and we'll see you in the next episode. Ciao.